The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a good weekend. Good to be back here. And let's just get started off with the S&Ps here. Talked about, a little non-directional last week, and, talked about the breadth actually looking a little heavy, but when you have a unemployment report that stays the course, 1,000 points of light, and especially, moves past some of the barriers that we talked about, 2169, 2170, you kind of got to, take that for what it's worth. The long-term trend is still up. Talked about a little bit of a chance to possibly, look at this from the short side, but again, we keep looking at turning the rents the same way, put the stops in if we're wrong. The long-term trend on the breakout scene happened above 2101, 2105, and this consolidation that happened for a while here in the sorry about that, folks. This consolidation that happened for a while, and I mean, good Lord, when did this start consolidating? Back in mid-July, so almost a month of consolidating in a very tight range. Seemingly has made new highs and wants to actually edge higher this morning. So that's what the deal is on the S&Ps right now, and you can't argue with what the bids and offers want to price the market at right now. So as we look at this, I want to point out some things that happened intraday on Friday. If I go into the breadth situation here, on the 3rd, we started getting back into positive territory. Again, this is a short-term kind of day trading futures technique that you can use. What I was looking at was, we had kind of gotten into a situation where we're crossing into some kind of negative territory here. But again, using those major market inflection points, there's that 2169 there right on the left. Again, the tide of the marketplace is definitely up. And the short-term guys, really, you're going to have to pay attention to this for any type of action that you want to see on the short side. So going back into the scanner, we had talked about, trying to buy the strong and sell the weak. That's the general MO that we like to use. We want to look at crude oil really quick before we go into some underlying instruments. And take a look at, this yellow peelback that happened in the scanner on the September contract. That was kind of okay, it might be time to take some weight off on the short side finally, and then we get the new profile, and now we're looking for 43.33 to be hit on the daily to look at this from the short side again. So that's the situation on crude. It gives you a really good reason, in my opinion, to say, hey, it's time to take some weight off when you see these yellow peelbacks happening in the scanner, new profile, and now we're just waiting for an inflection point to be hit. Still kind of in no man's land here. We are starting out the week showing a hint of a new profile attempting to appear on the weekly. But again, the big number here, and we're getting close to it now, 43.33. Had some news out of OPEC. You guys can read about that. But the technical action here is, and here's the 240s. You want to wait till 43.33 to pick any battles on crude on the short side. On gold. Waiting for this to come up here. All righty. So, what do you do with gold now? We talked about 1347 as a battle point after that report on Friday, and that actually did provide somewhat of a bounce, for a day trading situation. Let me just kind of show you this. So I think here's where the initial reaction hit. There's that 1347 we bounced up, and then when we start, migrating below those long-term strong inflection points on our daily, there it is, 1347, and then we get a close below. Then you've got to just say, you know what, we got to sit tight now. I like a little thin profile that happened here. I'd love to see it get back above 1347 on the long side. I still kind of take this as gold, just saying, you know what, we can take a little bit of a break here. The market's making all-time highs. There's not a lot of fear, obviously, going on right now. 1331 is the POC on the weekly. Not, that's something you can lean against, but again, I'd rather just see this thing get back above 1347 and close above there to start looking at moving north again. The market could, making new highs. It could get some people into the market this morning and tomorrow. Gold could continue to kind of slough off a little bit. But, again, what is the long-term trade here? The long-term trade is still long. I had somebody call in talking about this 1367 area on the December contract. I wasn't a big fan of shorting that. I think, again, you really can take a look at what's the long-term trend and trade with the odds based on what the long-term trend is. And again, you got 1331 sitting here, and you've also got 1347, but I'm a bigger fan of just waiting for this thing to at least get back in the fair auction on the daily. And I'm not a big fan of shorting something against that long-term trend up. All righty. Notes, astonishingly basically holding in there. Here's the situation on the 10-year. Amazing. Market makes new highs. This thing just comes down to support, not really breaking down at all. And again, I'm looking at this as a chance to buy this. You got a lot of things other than, people rolling out of treasuries into long stocks right now. You've got that global arbitrage thing going on that we've talked about pretty religiously. And again, looking at 132, this general area, it definitely is support. As crazy as that sounds, that rates need to stay basically at zero. It is what it is. The dollar, talked about not really wanting to be short this particular instrument right now, getting back above 95, 98, let's call it 96. That's going to be your support on this thing to move higher. Silver, really quick. Been a bigger fan of being long gold and silver. We've talked about that. Got to get back above 2002 to seem relatively attractive. You do have a POC on the weekly or at 1962. But again, I'd rather see this thing go a little bit higher and get back at least into the daily balanced area. Let's take a look at copper, and the reason being we are kind of getting back above that weekly unfair low now. We're going to talk about this a little bit more when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Man, that Roger Ailes, son, he watched Mad Men too much, huh? Whew. God, he's in a pickle now. All right, taking a look at copper. September contract. Here we go. So, again, you want to wait until these things get into areas of high probability, inflection points. Here we are again, 216.77. I actually feel really good about buying this bounce on copper. And again, the thing is 2.3295 up top will be your initial targets. I actually think we could head a little bit higher here. Let's take a look at a couple of Dow stocks that just haven't really participated this year, as well as some of the other folks out there. Caterpillar's not one of them. I typed in the wrong stock. Here we go. Let's take a look at Boeing. Talking about distractions. Here we go. Again, what do you do with this? If you're a long-term investor, let's just kind of back up for a second. The reason I wanted to pull these up is because, it's painful when, everybody's bought the spiders or the latest, greatest ETFs. And your particular stock really hasn't done a lot this year. And, on a relative scale. So when we look at something like Boeing, what do you do with it? If you look at it from a pure technical analysis standpoint and throw the markets out the window, it's not going down. We've actually, since the 1st of January, I think that's the 1st of January week right there, it's down, down 9%. So when you look at something like Boeing, does this have a chance if the market ever does pull back, and God knows when that's going to happen? If it ever does pull back, you might want to just kind of take a look at, how this has acted when the market has pulled back, in those scant amount of times that it has happened. Does this have a relative weakness play for coming down with the market. And, I got to take a look at this and say, some of the things, and, here's the highs, here's the lower highs, here's the lower highs, and not really wanting to get out of his own way lately. Obviously had a little bit of a move on that Brexit bounce. But again, do you have better things to pile into right now? In my opinion, you do. So if you're long this thing and you've hung in there, this is the type of thing I'd look at possibly being short below 130 on this particular stock. It's not overthinking it. It is what it is. Looking at American Express, a financial stock that's underperformed. This is our weekly on American Express, and I'm just looking at this relative to profiles. We kind of got back up in there. We retested. The market's kind of rising, tide lifts all boats mechanism going on right now. But if we head up any higher, in my opinion, again, we're trying to look at relative weakness plays, and there's not a lot of. If you look at the scanner, there's just, and I'm gonna go in here. This is our S&P 500 and NASDAQ. I'm going to look at stocks trading below profiles. There's not too many here. And, even if I go to neutral here and I'll look for arrows down, there's not a lot. So, there's some choicer picks in here, but when you look at, some of the Dow stocks that really haven't participated, here's definitely one that you can put a win on the board as far as looking at something weakness relative to price and then trying to find inflection points to lean against. So let's take a look at a couple others here that are just literally down on the year. Another XLF stock, Goldman Sachs. What did they say recently? They said something else that they gave a recommendation or an alert. They're the guys who called long crude at 47, remember. Again, you look at lower highs, things like this aren't really on sale when the market is screaming north. And as we look at Goldman Sachs, I think 163.35, you can put stops above there, and I think you could easily revisit 152.26 down below. I personally tried to pick a battle on this stock down there. Again, got stopped out. It's okay to try it again higher, 163.35. Market's kind of, ramped up a little bit here. And we also want to look at the sector when we're kind of looking at these things. Here's the XLF. So the XLF breaking out too, and Goldman Sachs is kind of staying behind. So, you've got that 163 still sitting there staring you in the face, and it is what it is. Another one, Nike. And again, we're looking at relative weakness in price, not really relative weakness in profiles right now. You got some serious headwinds up here. This stock is really not participated. It's a Dow stock, 57.44 and 56.44. So you got a nice little dig-in area here as far as the shorts go. And any type of market pullbacks. I mean, I'm not saying get short everything right now, hoping the market pulls back. I'm saying you got some short candidates, and you've also got some long candidates. And that's kind of how a lot of folks, especially some decent portfolio managers, simply run their book. Let's take a look at a couple others here. Let's take a look at Microsoft. I've actually been a big fan of this thing after it crossed the 53 border and came back and retested. And, the market obviously being on a tear has helped tremendously. But here's the long-term on Microsoft. And if you're looking at, just a massive market cap stock, if you're looking at this, like, what do I do now? I don't think you can buy it up here. Again, you have to buy breakouts or buy support on stocks like this. And that 53 and some change and being able to retest that area, I'm sorry, there it is. Is the stronger trade on the longer term, but what do you do with it now? I think you got to wait and see on a stock like Microsoft. I don't think you can buy it up here or short it up here for sure. Let's take a look at Merck. Obviously some decent news, takeover type stuff. Do you come in here and short Merck as a day trader? Here's the 240s. You really don't have anything yet. I mean, you might have some inflection points to lean against here. Do you go long? I think this is one, you know, it's a story stock to say the least. I think you just have to stay away from it. Bristol Myers kind of the opposite situation on that. And, you know, what do you do with Bristol Myers? Again, there's, you know, the mass exodus may not have fully happened yet on this, but if you can get any bounces back up into 66, I think you've got to be looking to short this particular stock. A lot of stuff shaved off there. McDonald's. Looks like we're printing pre-market 119.55. And we're going to talk about this one a little bit when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. We're going to finish up with McDonald's here really quick. If I can type in the right symbol. Let me put this up here. Then we're going to hit Cisco. You know, pre-market looks like we're up a little bit, 119.54. That looks like a real print. So we're kind of getting back above these weekly unfair lows, still within the noise area. I've talked about this weekly close being pretty powerful and hoping we can get back into this 119 and some change area, or 119 rounded off. I think this is still within the noise area, still a stock that I think deserves to come down a little bit here. And the technical action, I think, really looks pretty good on this. I mean, if you're looking for stocks that might come down in a market that might come off, again, this is the type of scenario you want to look at. So one of the things I like to do in this scan, let me hit Cisco. Man, am I scatterbrained or what? Cisco, here we go. Okay, so, obviously breaking out of weekly unfair highs, this is kind of saying we're blocking out the short side. Let me say that again. At the bare minimum, this lets you know on this type of action, weekly closes above, we're blocking out the short side. So, we've continued to edge higher on the weekly. And we found support on the daily after that breakout back in here. So, what do you do with this now? I think you still block out the short side. If you're considering that this thing may have gone too high and we're kind of out shooting our goals here, if you're thinking about the short side, you've got to get back down below 31 at bare minimum. And then you also would really love to see some long-term inflection points to lean against and actually targets on that short. But right now, it's a stock that is strong and this market could continue to go higher. I think Tom was talking, 2,200, 2,220, 2,240, somewhere up there. Let's see where we're at this morning. The long-term slant on the S&Ps, I think we both agreed that the long-term, vision has really been, long-term go up high, consolidate, and possibly move higher. I thought we were actually going to have a little bit of a possible down move here before we went higher based on some of the breadth stuff that I was looking at, but not anything major to write home about. It wasn't anything to just kind of say, hey, look, we're getting ready to have a big market turn. And those 60-minute profile net breadth calculations kind of help me tell the story on the shorter term. But again, all things considered, talking about Cisco, it's a strong stock in a market. It's above profiles on the weekly and daily, and I think you've got short-term support at 30.87. So that's the way I'm looking at it. Okay. Okay, going into the scanner. All right, so one of the sorts I put up here is I just put up, things that are kind of hanging around weekly unfair highs. So what's possibly not moving up higher relative to those weekly unfair highs? Let's just take a look at CCI. We've had a decent pullback here on the daily. And what this is saying is that we're pulling right back, and that's why this top, it's just letting you know if some certain stocks are around these major inflection points. So 96.26, CCI has pulled back to, obviously lately it hasn't participated with the market that well, but again, this is one I would not be shorting. I think you've got a chance here with support, even though it hasn't acted that well relative to the market. We've had a decent pullback in a stock. You've got those daily unfair lows sitting here too. Could be in store for a little bit of a bounce if the market continues to head higher. Bank of America. If you're looking at this from the long side, I mean, you definitely got a weekly close above here. Let me pull up the XLF again. Here's the XLF trying to get some momentum up. But again, I don't think there's a lot to this move. So if you look at Bank of America, and it looks like pre-market, we are printing 2406. And we're about where we closed on Friday for the XLF. So when you look at Bank of America, you really just want to look at this, in my opinion, if we can get back down below 1491. You could be looking at a little bit of a chance for this to move back down. But again, the market has made new all-time highs. There could be some people coming in today and tomorrow and just buying stocks, and some programs out there, portfolio type programs, that just almost are forced to buy by default when things like that happen from the kind of old school breakout notes. Okay, so let's take a look at the scanner again. Just kind of getting some ideas here, looking at stocks that are kind of hanging around the top of profiles here. Here's Ingersoll Rand, IR. Here's the daily. Here's the weekly. A little bit of resistance there. If you're looking at some day trading opportunities, this might not be a bad place to play defense. A couple other ones. MMC. Let's take a look at that one. We'll stay away from that one. AEP. This is another one just coming down into maximum support here. Top of the profile on the weekly. Could get a little bit of a bounce on AEP. DuPont. God, that looks a little scary on the north side here. All right, let's take a look at currencies really quick. I have to restart that. Hold on, guys. All right, taking a look at the British pound. Thought we were going to get a little bit of a bounce off of this area. This is kind of Custer's last stance on this right now. I don't like how it's crowded down here now. 130.19 weekly unfair lows. We still could use that to play defense. We haven't explored the entire fair auction at all up top. This is pretty much Custer's last stance on this. You can trade against this down here, but I gotta admit, it's not acting that well coming off of these weekly unfair lows from last week. So last week, as you can see, on Friday, we kind of already have done the bounce, and now we're kind of consolidating down here. Kind of a scary situation, actually. I'm not impressed with how it doesn't want to get away from these numbers down below. Euro, as you know, big fan of being short this with the hedge. The yen did use those areas to play defense against, 124.25. God, I hope we go higher on this. Here we go. Aussie dollar. Still have not reached the ultimate targets up top, 77.46, but I think we're ultimately going to get there. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out, and throughout the week when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Taking a look at Walmart, some news out this morning. Looks like it's printing 74.25. Here's the, just want to back up on Walmart. I mean, this was, again, that relative strength trade we were using on the way down, and then we finally kind of broke profiles here, got some confirmations. You probably had, you know, maybe if Basil and Steve Rhodes and everybody else and David White and Tom maybe had got some indications a little early that Walmart may have been turning back here in November 2015. That was a pretty significant move up right there. But, you know, the profiles kind of confirmed this for me, that it was okay to kind of start looking at this from the long side again. But, you know, what do you do with it now? Even with the news this morning, it looks like we're just getting back to these weekly unfair highs. We haven't explored the fair auction all the way down to 70. You know, we've got some resistance here at 73.91 also. So, you know, what has it done for me lately? You know, it hasn't exactly, you know, moved up and made new highs with the market making new highs on the move Friday. It looks like we're trading 74.25 this morning. We're right at those weekly unfair highs here. So, again, might be a little bit of a chance to play defense for a short-term trade against a long-term trend. But, again, any closes above 74.35, it could be off to the races for Walmart again. Okay. Get this. Okay. Yeah, we're going to avoid that one. Sorry about that, guys. We're going to look at United Health. All right. So the reason I'm pulling this up is if you go in the scanner and you look at, and let's just clear our sorts here, and you look at, you know, stocks trying to form new profiles. This is Friday. This is kind of Monday. You know, Monday morning we're going to get some new information, new long-term profiles. If you look at this, this is another piece of the scanner that I don't talk about a lot, but it's very appropriate for Monday morning. You look at Alcoa, new profiles attempting to appear up top for a lot of these stocks. Okay, so in fact, there's 5.92% of the stocks in the S&P trying to form new profiles above. Okay, so, you know, just picking one out, Alcoa on the weekly. This means new supply. This stock really has not performed super well as the market's been kind of making new highs. You've got a new profile attempting to appear here. You've also got one on some other household names here. Let's take a look at, is Coach a household name? I don't think so. Let's look at FCX. Actually, let's don't look at FCX. Let's look at Johnson & Johnson. So a stock that's been in the stratosphere, and then you've got new supply coming out this morning. You'll have new profiles. This will change a little bit. And if you look at Johnson & Johnson, well, let's finish up with UNH first. So the reason I brought this up is because, you know, this is the type of scenario you really, I mean, again, you know, we talk about relative strength trading, relative weakness trading. When you have these indications, you want to leave this alone. Okay, this means new supply happening on UNH. So this is targets for your longs, and you want to be just not necessarily reversing, but if you've got anything in the stock, you want to think about taking some, at least some of it off. So let's take a look at Johnson & Johnson. A similar situation. You'll have a new profile today. This is one that's just been on a tear. I don't have to tell you that. But now you've got new supply happening here, and you've got, again, relative strength better plays than a formation like this happening. A couple other ones on the board here. Let's take a look at Pfizer. Man, that's called a pullback, huh? So we'll have a new profile appearing on Pfizer today. You know, it's been a strong stock. We definitely pulled back to support here. But again, I think you got to wait and see. You're going to have more current inflection points to pay attention to in the long term here. Let's take a look at Union Pacific, UNP. If you got anything in this, you might want to take this off on the long term. That's just an algorithm that's pointing out that we're going to have new supply coming out. Martin Marietta, MLM. Again, you know, this is a stock, you know, if you want to look at it on the last week time frame, didn't exactly do that well. But again, you've got new supply here. You've got a stock that kind of ran out of gas a little bit here. And I think this is one, if you've got anything in it, you've got to take that as another indication that it might be time to take some off the table when it comes to MLM, Martin Marietta. Coca-Cola, talked about if we could get any type of rallies back up into 44.60. We've had a kind of a serious breakdown here, but now even on the dailies, you've got 43.37, not exactly acting like we want to, you know, get away from those inflection points. We could have another sell-off here in Coke. Any type of market help would probably push this through 43.37. UTX, yeah, I don't think you want to be playing around with on the short side of that, but just wanted to pull it up because it was showing above profiles here. Let's take a look at Amazon. Let's see how this thing acted. And again, you know, we talk about, you know, blocking out the short side, and the reason being, you know, when you're up here and you kind of come back and find support and the market moves up and your stock moves up, or this particular stock moves up, and it's shown to be the case for a while. You know, again, this is something you just got to stay away from on the short side. Things on their highs go higher. Netflix. You know, I'm not exactly impressed with this. 96, looks like we're trading pre-market 96, so we're back down below weekly unfair lows. I like this as a short. I've liked it trying to pick a battle at 88.35, and I've liked it around 96 and some change. I still like this stock as a short. Again, picking the battle here and then picking the battle again there. It's not a healthy looking situation, technically speaking, here, especially with all the market help that's happened. We're going to take a look at Apple when we get back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Talking about Apple, we crossed the board, and I apologize for trying to cover so much. I just feel like, got an hour, we're trying to throw as many darts on the board as we can for you guys to be aware of. The scanner, literally, you could find a lot of different things that you want to see on a day-to-day basis in here. You can find short-term opportunities. You can find reversal type opportunities. In fact, I spent actually a lot of time on this, like, uptrend reversals. The market's been going up. What's kind of starting to show cracks in the armor. I love this one. When the market's going straight up, a lot of times I'll just head to this and see what kind of is not cooperating. Sorry about that. But again, there's a lot of different things you can find in here. I was looking back at my notes this weekend. This is how interesting my life is right now. I actually rented a hotel room and went in there just to focus exclusively on math as far as the trading goes. And I was looking back through a lot of the notes from forming this scanner and all the different time frames and different things that, really, in my opinion, were pretty innovative. You can't really find this anywhere else. I don't think anybody's beat their head against the wall that hard. I was looking at some of the notes of, what we were using to kind of get it to this stage, and I was kind of impressed, actually. But one of the things that, again, when the market's going straight up, you look at things that can possibly be kind of turning ahead of time, showing some weakness ahead of time. So, like Dominion Resources, I'm just going to pick this out. This is a stock that, of all times, and I understand it's an XLU stock, but again, these are ones that are showing some breakdowns, clearly starting to break below profiles for the first time in a while. Again, the XLU is kind of a little bit of a different story. A lot of these stocks on the reversals are in the XLU. If you can notice here, half of them are in the XLU. So, what does that mean in general? So we can go to the XLU. Wait for this to pop up here. And the XLU had kind of started breaking below profiles ahead of time before Friday, before that market rally, and then people are like, oh God, why do I want to be in the XLU stocks anymore? So a lot of the things that were going on in the scanner before these reversals happened, and I'm going to go back to the XLU section really quick. Here we go. It's the only sector in red, actually. A lot of times you can find, even before things break, you want to try to find things that are kind of possibly already breaking. So when you see 2, 3, 6, 3, 5, 4, 4, 3, these numbers mean how many bars or days in this case on the daily we had already broken down. So some of these stocks were at least able to be avoided on the long side in the XLU and possibly looked at, and I'm just going to pull up ES, Eversource Energy. I'm sorry, it's the wrong stock. Let me pull up this one. NI. So the relative weakness on this had already kind of been here, and then when we get the pullback on Friday, or excuse me, the rally on Friday, a lot of these people were exiting the XLU stocks. These were already ones that were showing cracks in the armor. So NI, let's see some other ones that had already, Southern Company, these ones that were already trading below profiles here. So a lot of different ways to use the scanner, folks. Stay tuned for Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.